Been looking for a good trade for us today, and I've been watching the price of oil come down, and I think there's a good opportunity right now to enter into an oil trade. A couple of things I want to look at. I'm going to start with the weekly chart. You can see that we still have good support on the weekly chart here. Got some stacked EMAs. We got a 50 EMA here, and you got 200 down here. It's important to notice where the 50 and the 200 are when it comes to setting my target entry. First thing I want to do is I want to run a Fibonacci level. I'm going to do that from the weekly chart, which is typically how I do them. Go ahead and put that in. Gives me some targets on what I might want to look for as we play this trade out. It may come back up to the 111 level. I could run a Fibonacci from here or from here. I'm going to choose this lower swing low to this swing high. And this is going to give me some support lines around 88, around 77. So you can see in this trade, I've got support at 88, I've got 77, I've got the 50 EMA right now, which is around the 90 range, and then I've got the 200 at the 69, 64. I'm going to switch to my next set of charts. These are my daily charts. I've got a squeeze indicator, volatility. These are my RSI indicators, and then I've got a DMI indicator right here. Most everything on here would make you lead you believe that the daily is going down, which it is. But that's okay because these top trades I placed looking more at the weekly chart. And I originally had an alert set for right here. It hit here, 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 here. I didn't enter a trade. Then it hit again today right here, right at the 95 level. The reason I didn't take those trades because I had some other trades going on. I didn't want to add to my portfolio. But I'm a little light right now. Just closed an XOM trade, which is another oil trade. So now that it's closed, I can jump into an oil trade here. And what I believe is a good area. I've got the pullback here. You've got some RSI here, indicates you might get some short-term moves up. A couple of things to keep in mind. The reason the oil is going down right now is because interest rates are rising. As the dollar's worth more, it is pushing the price of oil down. And also there's fears of recession, which is making the oil producers think that there may be a reduction in the demand in the future. So these are the things that are pushing us down right now, and that's fine. I still think that where I'm going to enter this trade and the time frame I'm looking to enter, we should be okay. So I'm going to pull up my options here. I'm going to go out to the October 22nd of this year, which is 56 days away. And typically what I want to do is sell a put. I'm probably going to sell the 57 here. It's 24 cents, which is $240. I'm going to try to get it for 25 or 26 just because it's right in the middle. After I get this trade initiated, then I'm going to set a close at about 50%. So if I open it up at 24 cents, then I'm going to want to close it at 12 cents. So it will give me a profit of $120 per contract. Let's look back at the chart again. This weekly chart. I'm going to set an alert right here. And what this is going to tell me is after I enter this trade, if it falls below this 50 EMA and also below this 61% Fibonacci level on the weekly chart, then I want to take a look at this trade and make sure that I still want to stay in it. In all probability, I will, because keep in mind, I'm selling an option down here in the 58 range. So I've got a lot of support coming down to hold this up. However, if you do enter this trade and it does hit this mark, then you'll just want to evaluate the trade and make sure you still want to stay in it. A lot of times, if it breaks through my first resistance level, I'll take a look at the trade. If it's at break even, maybe a slight loss or a slight gain, I'll go ahead and close it and perhaps enter another one, assuming that I still believe that this weekly chart is accurate and that we're going to continue to get support. Like I said, I have a tremendous number of support levels through here, so I feel very good about this staying up. I'm only looking to make 50%. If it were to make a move up to the 110 range, I might even be able to close this trade just immediately for a profit. Could take a couple of days. I have a very high percent success rate on the oil trades. I do really well on them. Unfortunately, I don't stay in them all the time because I wait for these pullbacks. I wait for pullbacks into this area, to this area, into this area, which if you see, I had a trade here and it actually did go against me for a short time, but then it popped back up and then time helped me out and I was able to get out of it. So I'm currently out of it, but I'm entered into a new trade right now around the 58 level. I think it's a good trade. Shoot for 50%. If it breaks through this 87, you may want to reevaluate it on your own. Decide if you want to close it then and maybe re-enter one further out or further down, or just let it ride, because I do believe there's a lot of support. Certainly, if it were to break this 200 EMA right here, I think there's a high probability that I'd want to close this trade, or at least adjust it in some way, whether I roll it down and out or whether I add some sort of a put to protect it. But that's it for this week's trade.